Were you ready for the move higher yesterday and the bid to disappear? We mentioned this to our students and subscribers yesterday. We will monitor for similar movements today as we have no shortage of catalysts between Jerome Powell speaking at 10 at his testimony, the 10-year auction, and CPI. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So last night we came right down to our line in the sand, which again, this is where we expect the commercial side of the market to step in and defend. And that is right where we had our Globex low. And that tells us a lot that there is still defense to keep that up to stay in risk compression mode ahead of the major data. And if we look at how we're positioned today, we are lacking insurance or at least over insurance for CPI. And if we compare this to what happened last month on January 15th, we were way over insured. And this is what leads to when everybody's prepared for a bad storm, it doesn't matter how bad it is there's too much money that's going to get put back in. And so we made a 90-point rally. Today, that's likely off the table as we don't have that same structure. Again, yesterday we saw this same thing play out. People at 9:55 started buying a lot of insurance ahead of Powell's testimony. And then by 11 o'clock, all of that insurance had lost its value, and the side of the market that sells that insurance, those insurance providers, made all their money, and that's what created that up move. We laid this out several minutes in advance at 10:01 before the rally started at 10:08. We laid out that insurance is bought, and we are looking now for that upside. And then at 11:05, we mentioned that the insurance play was over, and that's where the bid is going to disappear. And everyone bought protection, so upside was more likely. Now that they closed, the upside is done. And that was about 20 to 30 minutes before we made our big move lower. So yesterday we made our move up on the insurance. We posted here for our subscribers, and then we made our move lower for 20 points. Now you can watch tick by tick if you want and try to find a bid, or you can learn to understand where the flows are coming in that drive the bigger moves in the market and just wait for those with very high odds. And so if we look at today, again, we don't have that big insurance in the market, so we're not looking for any outsized reaction to the upside. It's possible, but not as likely. We look for those moments where it's very clear to see and where there's a very high odds edge in this, and we don't have that. And so today that actually opens the door for sideways to downside, depending on what the number comes out as. And we'll see as well, do we get the same behavior coming in for Powell's testimony at 10 that we saw yesterday? Because that would be that same down move before the next big push up or before the 10-year auction at 1, because the 10-year is going to matter as the Oval Office has now stated that they're going to direct the Treasury to focus on the 10-year for managing growth and expectations in terms of fiscal and monetary policy. And that is going to be important when we have the 10-year auction today that determines those yields. So those are the things that we want to pay attention to today in terms of our levels and where we want to be watching to interact. Our systematics in terms of flows, we don't really have anything until we get under 60.45 or over 61.38. And in both instances, we get about a $4 billion sell coming into the market. So either fuel for the downside or resistance on the upside. From our market maker standpoint, we have a single bid at 60.30 if we break our line in the sand. And then we have nothing until the market makers are flush with cash and they will start buying at 59.88 to 59.57. They will have no product left, so they will be looking to deploy capital. If we get a move up to 61.65, this is where they're out of capital. They have all the product, and this is where market makers will look to sell as well. So up in this 38 to 66 area is where we would have a top in the market. If we start to go to the downside, we have plenty of room. We actually have about 110 points down and only 70 points up. So about 1.5 to 1 in terms of downside potential. And there's, more capital that could be deployed at the bottom. So we are, in terms of a bigger picture, more constrained in the market. And being in risk compression right ahead of data is where the market makers want to be. And so for our levels today, We are looking for rotational from 60.62 to 61.13 with our line in the sand at 60.74, and we have some others at 60.79 half and 81. So this area between our mid and our lower 74 to we'll say 85 is where it's going to be the most choppy and where we'd really want to watch for a clean picture of where to get positioned. If we get over 113, we look for 6130 and 6143. And if we get under 62, we look for 6036 and 6024. Be sure to protect your wrist today, everybody. There are several catalysts out there, and have a great day trading.